This is an opportunity for investors, potential clients, to come and see London Securities, see what we can offer them. We discuss various investment strategies, portfolio reviews, and it's really to meet the team, so get a good idea of potentially, if they do come on board, what they can expect from London Securities. Every client is different. Every client is unique. There's not a sort of a one strategy fits all, but these are the things that we think are working quite well at the moment. So, cash to equity ratios, defensive and aggressive plays. You've got CAPM diversification, which is very important. You've got a core satellite, and you've got dividend yield support. There are other variations to that, but these are the main ones that we play. It's in two parts. The first part is mainly looking at very simple ideas that you can do to enhance your returns. So if you're looking at things like the elimination of the spread, slippage and stamp duty, a lot of costs are hidden away, which we can expose. And we really kind of open the doors for private investors to see how the professionals trade on the inside. And what we essentially try and do is to make sure that everyone's plays on a level playing field. The second half is a bit more technical, so we start looking at fundamental and technical analysis, looking at dividend income strategies, and also things like core satellite investment portfolios as well. Whenever you look at a stock, you should really have an indication about how much risk you're taking on for that investment. And again, the common mistake that's often made is you have a client or an investor who says, okay, well look, I'm willing to risk 10% of my investment, but I want to make 20%. Now in theory that works great. The problem with that is sometimes a company has a huge amount of risk that 20% doesn't make it viable for that investment. But if you bought that stock at £5, and if you had a strategy in place saying, well actually look, the most I'm going to risk on this is 10% or 5%, and what I want to get back is 20%, you can put your exit prices at the beginning. So you put your order in at £5, you get filled, fantastic, you've got the shares, and then you say, okay, well my worst case price is £4.60, let's say, or £4.50, and my best case scenario is £6. So I'm losing 10%, I'm looking to make 20%, and you've just completely taken away all of those irrational emotions of fear, greed, and all that sort of stuff. There's actually an optimal number of stocks that you should have in your portfolio. There's the optimal number. That sounds bizarre, but what is this magic number that I didn't know about? Who wants to have a guess? It could be anything, couldn't it? 10, 20? It's actually about 20. It's actually pretty much on the button. Yeah, it's actually between 15 and 25, depending on who you speak to. But 20 is a good area. I ask a question quite often. I said to investors when they first come on board, are you a long-term investor or are you a bit of a short-term trader? And and I've been doing this for many years. I don't think I've ever had anyone who's ever said to me, well, they've always answered the same way, either long-term investor or short-term. And really, the answer I've always been looking for, no one's ever answered it in this way, is I'm both.
I thought it was very informative, more than I expected it to be. And I found Rajit very refreshing, brought a very technical subject down to a more basic level, and I feel I learned a lot. When
you value a company, you can value it in two ways. Either you can look at a company in the traditional sense, where you look at the value well, effectively you look at the balance sheet. So you look at the profit and loss, earnings, cash in the bank, that sort of stuff. Or you can actually use this science, or whatever you want to call it, called technical analysis. And technical analysis actually is a very, very powerful tool now. If you've never used technical analysis and you're a serious investor, then you need to learn about it.
I thought Ranjit gave a very interesting and informative presentation. He's obviously a master of his subject, and I like the way he put it across.
Now, there's a very old saying that people are probably familiar with, sort of never try and catch a falling knife. And that's very true, because as you're buying something as it's falling, you don't actually know how far that's going to go. You're buying something and you're thinking, well, shall I, shan't I? You catch it and then you next thing you know, it's gone down another 10%. That's a very dangerous way of investing. It's something that we probably would never advise that you do. Far better than that is the momentum investing. And the way it works, as the share price goes down, rather than buying something on the way down, you allow the market to fall, share price to fall. It normally goes sideways for a while. And when I say sideways, I mean sort of creates a sort of source bottom. And as it starts to pick up, you want to be buying then. So you wait for the market downturn, you wait for it to pick up, because what you're effectively doing is you're going with the trend. So the trend is your friend. So you're buying when other people are buying. You're not buying when everyone else is selling, which is dangerous.
Oh, today's seminar was great. It was a good look at a unique way to invest. and something alternative to property markets.
So this is the opening price. That's the closing price. And all that it means really is that the share price starts from here. It starts from here. It goes up here, comes back down to here, and then it closes here. So all that happens is you look at a candle, and whereas you've got no idea, let's say you've gone out for there, you've come back and you're looking at your shares, and your share's worth £5, and in the morning it's at £4.50. Now you don't know what's happened to that company during the day. It might have gone down to £2 during the day and then closed at £5. It might have gone up to £10 and came back to £5. You don't know unless you actually look at the chart. If you have this, that tells you everything you need to know. So it starts at £4.50, it's gone down to £4, closed at £5, and at some point it was up to £5.50. So it just literally just looking at one small little candle, it just tells you exactly what the price has done. And if you put this together with other candles, you suddenly create a picture. Because what this does, it shows you investor sentiment. What this is trying to do is show to you not only what happened to what has the share price today, but what happened during the course of the day. And then, of course, it's your job then to try and analyse why certain things are happening. And then when you look at certain candles, certain formations and certain shapes, it tells you something about the buying and selling behind it. So it's all about sort of getting into the human psyche about what's driving prices.
Lots of insights. Broke some of the technical questions and around the candlesticks, different ways of measuring performance, broke it down to an understandable means, helped my understanding an awful lot. Gave you a lot more insight and took away some of the worries about that you don't have to be absolutely mathematical and a technical genius to understand that you can just have a look at some of the pictorial forms and they're very good.
It's quite a relaxed open seminar, it's sort of 2 or 3 hours. After that we have drinks, we have canapes, we have there's a quiz as well, so you can win a bottle of champagne. And then it's really an opportunity for everyone to mingle, to meet some of the team, and individuals who actually do want to come on board. We'll even waive their transfer fees for those who actually attend, who take the effort to come down on that particular day. And we can also look at things like, for example, income strategies or sort of portfolios or specific tips. I mean, quite often a lot of clients will look at us and say, look, what are you tipping, for example, for this particular month, for this particular year? And we can obviously give advice on various investments that's going to help in that respect.
I found the seminar to be very informative, and I found that it was very simple thing to understand for the person who is not very experienced into trading. And I think that I personally, in my case, I feel that I will benefit from joining the company.
I thought the seminar today was excellent. It's very good to meet the people who are going to be managing potential investments on my behalf, to see what they do with their own money and to look at the various strategies that they employ, whether it be through technical or fundamental analysis, whether it's market sentiment or just what is happening in the market generally. I get lots of people coming to me and saying, we'd like to invest your money because of this, that and the other, but it's nice to actually see the individuals rather than a faceless voice at the end of a telephone.
I've been very pleased with what I've seen, very pleased with what I've learned. It's given me a greater understanding, and that understanding has given me more confidence that I want London Stone to start to pull a portfolio together for me to have a look at, so I can digest it, interrogate it, and that's going to give me confidence in the relationship that me and London Stone are going to put together.
Yeah, after today's seminar, I'd say London Stone's top on the list of someone to work with.